Alexander Green's The Gone Fishin Portfolio is a clear, doable plan for your retirement money. The idea is simple: manage your own core portfolio using broad, low-cost funds and rebalance once a year. The goal is to get higher long-term returns with less needless worry. Green shows why fees, taxes, single stock risk and emotional trading ruin most people's results. He lays out a specific mix of assets: a heavy stake in stocks plus carefully chosen bonds, REITs, gold shares, emerging markets, and inflation-protected bonds to lift returns while lowering overall volatility. Every year you rebalance. That forces you to sell what's rich and buy what's cheap. It's the simplest way to buy low, sell high. The book explains why this asset allocation approach is used by big institutions and why it rests on solid academic ideas. Green also teaches two habits that matter more than clever tricks: save consistently and resist emotional moves. He recommends using low-cost index funds or ETFs and tax-advantaged accounts to keep more of what you earn. You don't need to time markets. You don't need a pricey advisor. Set the portfolio up, rebalance once a year, and get your time back. If you want a practical path to financial independence, one that reduces fees, cuts risk, and frees you to live your life, this book gives the exact steps to follow. Chapter 1: The Simple Truth About Wealth. Alexander Green begins by dismantling the illusion that getting rich requires luck, insider access, or complex financial products. He says wealth building is actually simple, but not easy, because it demands patience, discipline, and self-control. Green introduces the concept of rational optimism, believing in the long-term power of human progress and markets while ignoring the daily noise. He argues that most investors fail not because of the market, but because of their emotions. The real secret is to own productive assets, stay invested, and let compounding do its magic over time. He also reminds readers that money isn't just about luxury or status, it's about freedom and peace of mind. By saving regularly, avoiding debt, and investing wisely, anyone can build financial independence. The main message is clear: stop chasing quick gains, start thinking long-term, and use the power of time to make your money work for you. Core takeaway: wealth is built through patience, discipline, and the right mindset, not through market timing or fancy tricks. Chapter 2: Why You Can't Beat the Market. Here Green explains why most investors, even professionals, fail to consistently beat market averages. Decades of research show that stock pickers and market timers usually underperform after fees and taxes. The book cites studies like those from Morningstar and SPIVA that prove low-cost index investing beats most mutual funds. Green says the game is stacked against active investors. Emotions cause them to buy high and sell low, while high fees quietly erode returns. Instead of trying to beat the market, Green urges readers to join it by owning the entire market through index funds. He introduces the logic of diversification, spreading money across different asset classes so no single mistake ruins your portfolio. The real advantage isn't cleverness, it's consistency. Core takeaway: you don't need to outsmart Wall Street. Own the market cheaply and stay invested. That's how you win. Chapter 3: The Enemies of Wealth. In this chapter, Green shines a light on the real threats to financial success, and most of them come from within. Fear, greed, impatience, and ego are the silent killers of good investing. He tells stories of investors who made smart plans but ruined them with emotional decisions. Green also calls out common external enemies: financial salespeople pushing expensive funds, media panic cycles, and hot tips that prey on our need for excitement. His advice is to protect yourself through education, discipline, and simplicity. Build a system that doesn't rely on willpower, one that automatically saves and invests on schedule. Avoid watching your portfolio daily. Focus instead on the long-term goal of freedom. Core takeaway: the biggest obstacle to growing your money isn't the market, it's your own behavior. Master your emotions, and your portfolio will take care of itself. Chapter 4: The Power of Asset Allocation. Alexander Green calls this the single most important decision in investing: how you divide your money among different asset classes. He shows research proving that over 90% of your long-term returns come not from picking the right stocks or timing the market, but from your overall allocation. He explains each asset's role: stocks for growth, bonds for stability, real estate and commodities for inflation protection, and cash for flexibility. The goal isn't to predict which will win next year, it's to balance risk and reward so you stay invested through every market cycle. Green teaches that asset allocation is like building a ship. Some parts keep it afloat, others help it move forward. The smart investor doesn't bet everything on one sail. Instead, you own a mix so something always works no matter what happens. He also introduces the idea of rebalancing once a year, sell what's grown too much and buy what's lagged. That simple act forces you to sell high and buy low automatically. Core takeaway: how you spread your money matters far more than what you pick. Diversify widely and rebalance regularly. It's quiet, disciplined wealth building. Chapter 5: Stocks, the Growth Engine. Stocks, Green says, are your ticket to long-term wealth. They represent ownership in productive companies that create real value. Over time, stocks have beaten every other asset class, but only for those who stay patient. He explains the difference between large cap, small cap, and international stocks, and why having all three boosts returns while cutting risk. He also shows why panicking during crashes destroys compounding. History proves that markets always recover, but impatient investors don't. Green's advice: don't try to find the next Apple. Just own the entire market through low-cost index funds or ETFs. That way, you share in capitalism's global success without gambling on single companies. He emphasizes reinvesting dividends, the quiet power that turns average returns into exponential growth. Core takeaway: stocks build your wealth, but only if you stay invested, diversified, and patient. You're buying the world's future, not next quarter's headlines. Chapter 6: Bonds, the Safety Net. Bonds may not be exciting, but they are essential. Green explains that bonds balance the risk of stocks and give you peace of mind when markets crash. They provide steady income and act as a cushion during downturns. He describes different types: treasury bonds for safety, corporate bonds for higher yield, and inflation-protected bonds, TIPS, for security against rising prices. While stocks fuel growth, bonds preserve capital. Together, they create emotional stability. When stocks fall, your bonds hold up, helping you stay invested. Green also warns about reaching for high yields in risky junk bonds. The goal isn't to beat the market but to stay balanced. He recommends keeping a mix that matches your age and risk tolerance. Younger investors hold more stocks, older ones more bonds. Core takeaway: bonds are the anchor that keeps your ship steady. They don't make you rich, they keep you from doing something foolish when markets dive. Chapter 7: Diversifying beyond stocks and bonds. Here, Green widens the view beyond traditional assets. He explains that adding real estate, gold shares, and foreign stocks gives your portfolio extra protection. These assets often move differently from US stocks and bonds, so when one zigs, another zags. He discusses why real estate investment trusts, REITs, can deliver inflation-beating returns and why gold acts as a hedge when confidence falls. Emerging market stocks, though volatile, offer growth tied to global development. The point isn't to predict winners, but to own a smart mix of uncorrelated assets. That mix smooths the ride and keeps your emotions steady. Core takeaway: true diversification means owning pieces of many worlds: stocks, bonds, real estate, and gold. Together they build resilience so you can go fishing without worry. Chapter 8: The Gone Fishin Portfolio, Your Lifetime Plan. This is the heart of the book. Alexander Green unveils the Gone Fishin Portfolio, a simple, globally diversified mix designed to maximize return and minimize stress. He divides it roughly 70% stocks and 30% bonds, other assets, but more importantly, spreads it across 10 core areas: US large caps, small caps, international stocks, emerging markets, real estate, natural resources, gold shares, government bonds, inflation-protected securities, and cash. The genius of this plan lies in its balance: part growth, part stability, part insurance. Once you set it up, you simply rebalance once a year, taking maybe 20 minutes. You don't need to track markets, guess interest rates, or chase trends. He emphasizes, this portfolio is not about excitement, it's about results. The less you tinker, the better it performs. Historically, such diversified, low-cost portfolios have beaten most professional money managers over time. Core takeaway: build a diversified portfolio, rebalance once a year, and go live your life. That's the Gone Fishin way: wealth with freedom. Chapter 9: How to Implement the Plan. Now Green turns practical. He guides readers step by step through setting up the portfolio. Start by choosing low-cost index funds or ETFs, ideally from reputable providers like Vanguard, Fidelity, or iShares. He explains how to open an online brokerage account, automate monthly investments, and use tax-advantaged accounts like IRAs or 401ks. For each asset class, he provides example funds to make it easy. He also stresses the emotional side. Once invested, do nothing most of the time. Don't watch daily prices or react to news. Your job is to fund regularly and rebalance annually. Green compares investing to gardening. You plant, water occasionally and let time do the heavy lifting. Constant fiddling only damages the growth. Core takeaway: setting up your portfolio is a one-time project. Maintaining it takes just minutes a year. Consistency beats cleverness. Chapter 10. Rebalancing, the discipline that pays. This chapter explains why rebalancing is the quiet superpower behind long-term success. Over time, some assets rise and others fall, pushing your portfolio out of balance. Rebalancing once or twice a year restores the original mix. It may feel counterintuitive, selling what's up and buying what's down. But that's exactly what smart investing demands. It turns volatility into opportunity. Green notes that rebalancing also keeps your risk level constant. Without it, a strong bull market could leave you overexposed to stocks and vulnerable in a downturn. He gives simple rules. Pick a fixed date, say every January, check your percentages, and adjust only if any category is off by 5% or more. It's methodical and emotion-free. Core takeaway: rebalancing enforces discipline and turns market swings into profits. It's how you buy low, sell high, automatically. Chapter 11. Taxes, fees, and other wealth killers. Green calls these silent thieves, the invisible costs that eat away at your returns. He breaks them into three main traps. Fees: high-cost mutual funds and advisors quietly drain thousands over a lifetime. Taxes: frequent trading triggers unnecessary capital gains taxes. Inflation: it erodes real wealth if you leave too much in cash. The antidote: use index funds and ETFs, which have rock-bottom fees and low turnover. Hold investments for years to defer taxes and shelter them in tax-advantaged accounts. Green also reminds readers to stay alert for hidden brokerage costs and fund expenses. Every 1% saved in costs could mean years of extra retirement income later. Core takeaway: protecting your money from fees, taxes, and inflation is as important as earning returns. Small savings today create huge wealth tomorrow. Chapter 12. The Psychology of Investing. Alexander Green calls this the most underestimated part of wealth building. You can know every formula, but emotions can still ruin your results. Fear makes people sell too soon. Greed makes them chase hot markets. Overconfidence tempts them to gamble. Green explains that successful investing is mostly about controlling behavior, not predicting markets. He urges readers to recognize their emotional triggers and design a system that protects them from impulsive decisions. He recommends simple habits: automate savings, rebalance mechanically, and tune out financial news. Most headlines are noise meant to stir anxiety or greed. He also reminds readers that markets move in cycles, and every crisis eventually ends. Understanding this truth helps you stay calm during downturns. Green's philosophy is to treat investing like brushing your teeth. Do it regularly, calmly, and without drama. Core takeaway: emotional discipline is the real edge. Master your reactions, and you'll outperform most investors, even the smart ones. Chapter 13. Freedom, Simplicity, and the Good Life. This chapter takes a philosophical turn. Green says money's ultimate purpose is freedom, the ability to spend your time as you wish. But too many people make wealth their obsession instead of their tool. He encourages readers to simplify life, automate finances, reduce clutter, and focus on experiences, relationships, and contribution. A simple portfolio means more mental space for what truly matters. He also shares that real wealth isn't measured in possessions, but in peace of mind and time. By following the Gone Fishin plan, you can own your life instead of chasing the market every day. Core takeaway: simplicity isn't just efficient, it's liberating. Money should serve your life, not control it. Chapter 14. The Long View. Here Green ties everything together with one theme: patience. Compounding only works if you give it time. History shows that markets rise over decades despite short-term setbacks. He urges investors to think in decades, not days. Ignore forecasts, elections, and recessions. Just keep contributing, rebalancing, and letting time multiply your money. He shares examples of ordinary people who became millionaires simply by investing small sums regularly over many years. Green's closing advice: stop worrying about perfection. The plan works precisely because it's simple and steady. Even average investors can achieve financial independence if they stay the course. Core takeaway: time is your greatest ally. Stay patient, stay invested, and let compounding quietly build your fortune. Conclusion: go fishing and stay free. The book ends with an invitation. Once your plan is in place, stop obsessing. Go live your life. Travel, learn, enjoy family, and trust your portfolio to do its work. Green's message is beautifully simple. Investing isn't about control, it's about confidence. By using a diversified, low-cost, emotion-free system, you've done what 90% of investors never do: align your money with peace of mind. He closes with a gentle reminder: get wise, get wealthy, and get on with your life. Core takeaway: true financial success isn't about beating the market, it's about reaching freedom and having the time to live fully.